Labour market stats front and centre today. Let's get a little more on what we can expect with Evan Lucas from IG in Melbourne. Good morning to you, Evan. First of all, this unemployment read we're getting out today, probably one of the more anticipated ones over the past few years because of last time around surprise. What are you expecting?
Yeah, I'd have to agree, Kate. And the reason for it, if you have a look at what obviously the Australian Bureau of Statistics said last February, was obviously the fact that they had obviously rotated out about a quarter, maybe even a little bit less than that, of the original numbers that they usually use. They do this every 6 to 12 months, and they believe that was probably part of the reason why they saw such a statistical outlier with what we saw in February with those 71,500 jobs added. So that's why we probably would expect, particularly in the employment change data, to actually probably come on the negative side. They'll probably also review down the February numbers as well. We also too would expect probably the unemployment rate to hold at about 5.4. You may very much see it tick up ever so slightly to 5.5, but it will be very flat. Obviously, the Aussie dollar is what everybody's watching at the moment. We've obviously seen it really start to take off over the last sort of 4 or 5 days. It's really above that 105.1 handle. It's now moving towards 105.6. It's where we think the next resistance level will come. The jobs numbers today will certainly sort of maybe put a lid on that if it does disappoint, and it's probably likely to. But considering the fact that we are seeing Japan continuing to reiterate their stimulus package, the fact that the FOMC minutes basically said what most people expected was that people are still mixed, the Aussie dollar will probably continue to move up over the next couple of days, even with what we see with the unemployment data today.
Yeah, Evan, just going back to why you said we got that outlier number last time around, could you just explain technically what you were talking about there?
Yeah, absolutely. Look, every sort of 6 or 7 months, the Australian Bureau of Statistics obviously surveys round about 29,000 homes. It may be even up as high as 31 these days as they continue to prove their statistics above with our population growing. What happens is that they actually rotate out about 3,600 homes every 6 or 7 months. And what they believe might have happened in February is that obviously the 3,600 homes that they moved out and the 3,600 homes they moved in are completely different in terms of where they currently stand in sort of the socio-economic situation in Australia, and also that kind of material as well. So they actually believe that probably the February numbers were about 2 times higher than what they expected. They still expected them to be quite strong, so maybe 4 or 5 times above the expectation of February, but not as hard as it was. And you'll probably see that revised today, and also the fact that the March numbers may be a little bit lower as well.
Okay, interesting. Okay, let's go back to Wall Street now. The S&P, another intraday high there. What were the major drivers for this move?
Yeah, look, the S&P, a lot of people obviously are talking about the FOMC minutes. It's probably more to do with the fact that earnings season speculation is really kicking off. We saw Alcoa coming out on Tuesday with a relatively good result. Tonight's the big one. Tonight we see Wells Fargo. We also see JP Morgan. And if you have a look at what's been growing over there in the US, we've started to see people tiptoeing out of bonds and moving into sort of those high yielding equity plays, particularly the healthcare space and the financials, and people are starting to pick them up. We saw the health space up about 1.7, the financials up about 1.2 last night as people move into that high yielding play. So yes, we did obviously see the FOMC meetings help the S&P absolutely smash through that intraday high of 1576, obviously closed at an all-time high, and it's intraday high as well last night at 1588. Very, very strong moves, but a lot of people are starting to speculate that things in the earnings season is good. They obviously saw the reiteration from the BOJ last night and also the ECB. So that was the major drives we saw out of the US, and that's why a lot of people believe with what we're currently seeing out of the FOMC is that the 5 major players that actually said they wanted to continue on with the current stimulus package over there are the major ones. In Janet Yellen, we obviously saw Charles Evans, William Dudley, and also Ben Bernanke are the ones that are saying we want this to continue to happen. We think it's too early to change our opinion. We still think the economy hasn't really picked up the slack just yet. We've still got a little way to go. And if those 5 members are the ones that are talking about keeping it on, it's going to stay on. A lot of people are still getting caught up with the fact that the people that are sort of coming in those hawkish views are non-voting members. That's the same as what we saw last month in February. The non-voting members are the ones that are coming out a little bit more hawkish, saying we need to start turning it off. We need to do it now, not rather later. We need to get on with this in the interim rather in the short term and to the medium term. The main ones, as I said, are those big 5, and they want it to stay and look like into sort of 2015 as that main figure. That unemployment rate of 6.5% is what they're looking at, and inflation is still under their target of 2.5% as well. So it's here to stay. That's why the S&P moved up higher.
Okay, let's also chat about commodities. We got a bit of a mixed read there overnight. Gold also taking a step back and giving back some recent gains. Part of that was on news that Cyprus is going to sell out some of its reserves, and also a rejig of a Goldman Sachs rating. Where to here for gold now, Evan?
Yeah, look, I've always sort of had a look with gold. Gold is obviously basically a bit of a lag behind silver. Silver is already in a bear market. It's down about 21% for the year. It's been as low as 23%. It's jumped up over the last couple of days. I believe that gold's probably heading in the same direction on a medium to longer term view. Last night, the fact that obviously Cyprus probably gave it a bit of a jolt and pushed it down further with the fact that they are selling out, and the fact that Goldman's have rejigged their sort of outlook on gold would suggest that you might see gold heading towards that sort of 1530, even as low as 1500 US dollars as an ounce over the next medium term. Last night was probably just the start of catching up from obviously pushing down the short covering we saw over the last couple of days. Watch the gold miners today, particularly for the likes of sort of Newcrest, etc. They have jumped up quite strongly over the last couple of days, and this is not going to bode well for them. They do have quite a strong correlation to the gold price, and you're probably going to see them fall away today.
Okay, Evan, thanks so much. We'll watch out for all of that.